Hey, it's good to see you and good to hear from you. You know,
Oh
hustle
man.
man. I know you be out there getting it in.
I be trying to, you know what I'm saying? I be trying to get on my Walter Davis game. You know what I mean? Hey, try to get these checks out here. Got to
hey,
keep the lights
hey,
on.
hey, look, I'm right there with you on that. Got to keep the lights on. Got to keep the lights on. So today we're gonna talk about, we're gonna kind of dig back into credit. You
Okay.
know, because
Yeah.
we're gonna start doing these little series back and forth with credit and because what I'm finding is so many people out here trying to figure out what to do or how to do it or where they start or they delaying even the process. So first, I guess I should tell everybody, hey, what's going on? This is Walter Davis. We here with my main man, Corey Smith with CMG Financial. And of course, this is one of them moments where you get to talk to a real estate agent and a mortgage guy at the same time. But
There you go.
the thing they gotta understand is that we're gonna keep it real, like real,
There,
real. We're just gonna tell you how it
there you go.
is. And
There you go.
and hopefully they like what we got to say and then we can kind of go from there. But look, I got even some notes. I took some quick notes. I don't know, I didn't even know if I told you,
Man, I feel bad. Where my notepad at? Let me just make it. Let me get my notepad in here. Make it feel like I'm doing something.
Well, I'll tell you what. Let's tell them real quick. I've been working with you for years, of course. You know what I mean. But let's tell them a little bit about yourself real quick. You know what I mean. As my girl V say, the CNN version. Tell them a little bit about yourself.
Well, you know, the biggest thing is that I come from a background of kind of different industries, that type of thing. When I got into the whole workforce, I ended up starting off in the oil and gas industry. I went through the cycles, up and downs and stuff of that. And then essentially once I started feeling like, I was getting sick and tired of the actual up and downs of the oil and gas industry, I figured I'd, kind of start working on something a little bit different, which is, where real estate kind of came in and came about. And then, fortunately, I was laid off from an oil and gas company, which was downtown. And then after I got laid off, I went 100% into real estate, doing mortgages and such. And thank God, with his blessings, haven't had to look back.
Gotcha. Look, I don't know if I can see you down at the oil company, all 6'20" of you walking through the office building, trying to see what's up, but I'm glad that they messed up and got you on this side because like we done put a lot of clients into houses and then we're gonna continue to do that and by educating them and keeping them growing and showing them what the next steps are. So let's dig right into credit. And I'm gonna start with the big one, right? The big one is credit challenges. Like what does credit challenges mean or challenge credit? Or, I just like to keep it real. I call it bad credit. You know what I mean?
Credit or credit.
They make it PC, but
Yeah, PC ain't gonna get people inside houses. So you know what I'm saying?
No.
We gotta keep it real with them so that they can actually fix their stuff and then be able to get inside a house. For sure.
So tell me, what would you term as bad credit? Like what is, I know we had the two things and I want to keep it generic because me and you, we get to talking into real estate acronyms and stuff, but we know that there's a FICO score that tracks a number that gives them an idea of their credit. And then we know that sometimes the number doesn't tell the whole story of credit, right? It's just, it might give them a representation, but there's more to it when you go into debt and just different aspects, like how long it's on the report. So tell me a little bit, let's break down what is bad credit.
Okay. So bad credit is essentially a relative term. You know what I'm saying? It's going to be different to different folks. But when you ask me from a lending standpoint, if you're 600 credit score or below, then essentially you've said I would classify that as bad credit. And then the reason you classify it as bad credit is because there's a lot of companies out here that are marketing for those people. Like, hey, look, we do down to 500 or 550 or whatever the case may be. The likelihood of you being able to complete that loan is highly unlikely. So essentially, you would like to be at a 600 or above. So the short answer to your question is, if you're 600 or below, I would consider that as bad credit.
Okay. And so, and I know you said that the likelihood is, you know, and I don't want to go down, you know, we might go into a whole new, you know, we can talk about this. We can go into whole other episodes about stuff like
absolutely.
this. But
make it
a
series.
Yeah, you know, but I know that when we look at credit under 600, there's still a capability of getting a deal. The dilemma is probably they got to have more money though. You know, they got to understand that we talking about 20, 30% down, like old school traditional routes where, you know, you got to have one or other. You got to either have credit or you got to have money. But if you're going to use your credit, then this challenged credit comes into play, right?
Exactly. So you're saying it's a little bit of a kind of a scale a little bit. And you're saying if you have money, then the chances of you having bad credit is highly unlikely. So you're saying you will have decent credit, if not great credit. But typically, you know what I'm saying, in most people's situation, if you got bad credit, either, you know, you're somewhere down the line money challenged to where, you know what I'm saying, you couldn't pay people on time or just chose not to pay people, whatever the case may be. So in those situations where it becomes it decreases the chances, or kind of what you alluded to, that 20 or 30% that you have to put down, a lot of people that's in those bad credit situations just don't have those amount of funds. But the other thing to kind of take into account too is that now that you're below a 600 and you're a low 500s or whatever the case may be, you're more of a risk. And when, from a lending standpoint, when you're more of a risk, we kind of have to put in place different things to kind of protect ourselves. So where I'm going with that is that your debt to income ratio is drastically going to be reduced. So as opposed for you regularly qualifying for a house, you may regularly qualify for a $300,000 house. But now because your credit score is so low, we have to protect ourselves. Now your $200,000 or $150,000 is all that you qualify for because your debt to income ratio has been reduced. So there's kind of catches to it or whatever the case may be, especially when you're credit challenged. The biggest thing is, in order to kind of put yourself in the best situation, you got to take care of your credit and increase your credit score.
Okay, so let me pull the apple out of the sky here and kind of talk this in generic terms. And what you're telling me is, okay, I haven't paid my car note on time. I ain't paid my credit card bills. I got a bunch of collections from doctor's appointments and places on my credit. That drives my credit down, okay? Now, I want to buy a house because I'm tired of paying $1,700 to this person for rent, okay? And if I'm paying $1,500, $1,600, $1,700, I should be paying my own mortgage anyway.
There you go.
So when they come to me and you, and we pull a credit, the credit is going to tell us, oh, your score is at 520. And I'm just throwing a number out there, right? And what you're saying is as the lender's representative, the lender is telling you, the bank is telling you, Corey, I cannot lend them $250,000 because their history, which is the credit, is showing me that they don't pay their bill on time. And because of that, how do I trust that they're going to pay us on time? Am I kind of putting that in a good,
100%. So you're saying essentially your credit score is a representation of your rep. Like you said, if you was out on the streets, the way you dealt with other people or whatever the case may be, that's going to kind of carry you. If somebody else is getting ready to do business with you, they're going to ask other people about you. Hey, you're saying, have you ever dealt with Walter? You're saying, what kind of businessman is he? Has he been upright? You know what I'm saying? Is he above the book? All that type of stuff. You know what I'm saying? And then if somebody else comes out and they say, "No, you don't want, your rep in the streets is, in the so-called streets is bad." You know what I'm saying? That's going to affect people's perception on you moving forward. It's the exact same thing for credit. Like, you want people to actually be able to look at your credit and say, "Oh, okay, well, they had some stumbles. I see that, but they had these 4, 5, 6 other accounts where they've never been late on. They paid those on time." And if you have those 4, 5, or 6 other accounts, then it's going to reflect in your actual credit score, and your credit score is going to be higher. There's no way you should be down in the 400s or just low 500s, and then just think it's going to be an immediate thing where you can just easily get inside a house like that.
Gotcha. So this is where the magic question comes in, right? And of course, the first step, of course, is contacting me or contacting you. That's the first step. Let's take that out of the wings, and let's say I'm sitting there watching Netflix, and I had to cut that monthly check out for $1,700 or $1,600 for this 3-bedroom, 2-bath house that the landlord ain't fixing. Okay, you know what I'm saying? Yeah, I mean, you know what I'm saying.
It happens a lot. It happens a lot.
Okay,
it happens a lot.
And now I'm thinking, I'm tired of paying this rent. I want to buy a house. But based off what you just said, the scores are where they are. I know my credit ain't the best of credits right now. I know I'm not in a good position. So what would you say they do first? What would you say is the first thing they should do?
The first thing you got to do is be able to get a credit card. Point blank, period. A lot of people kind of think or have been told that credit cards are the devil. The credit cards are out to get you. They're going to put you in debt and all this other good stuff. And a lot of people just don't understand that bad information circulates itself out to the actual market, to everybody. A lot of people think that, hey, look, this is what I've been bred. This is what I've been told at all given times. You know what I'm saying? My grandpa told me this. My dad told me this. Or my mom told me this. But just because they told you that doesn't necessarily mean it's the Bible. It doesn't necessarily make it true. So when it comes to credit repair, you can look on any articles or anything like that. Credit Repair 101, you have to get a credit card because we have to understand and know that you can actually be responsible with debt when it's given to you. All right, so that's the first thing. The second thing is, depending on how bad your actual credit is.
Hold on. Let me cut you off for a second, okay?
Yeah, what you got?
Because I think the question I got in regards to the credit part, and I know the answer to this, but I want you to tell the people this.
Sure, I got you.
If I got bad credit, I can't just go fill out a Chase card, Bank of America card. They're not going to send me an unsecured card because I have bad credit. So, but you just told me I need to get a credit card. So what is it that how do I do that? What do I go? What do I do?
Great question. So essentially, if you go and try to get an unsecured credit card, you're not credit worthy right now because your credit score is down in the dumps. We're trying to get it out of the dumps. In order to get it out of the dumps, we have to try to figure out a way to kind of build it up and then just kind of get an actual credit, give somebody to give you a chance, so to speak. So if you walk into your bank now, what you want to ask for is a secured credit card. But a lot of times, even if for a secured credit card, like let's say, for instance, you're banking with Bank of America. You walk into Bank of America, you give Bank of America $300, Bank of America will give you a credit card with a $300 limit on it, right? So in most people's mind, they'll be like, well, look, I gave them $300. What's the risk? Like, there's no risk. I gave you the money already up front. So just give me the credit card. But the surprising thing is you can still get denied for that, even with you trying to give them money, you can still get denied. So what I like to tell people to do is, especially depending on how bad your credit score is, what you want to do is you want to go to a credit card that does not do a credit pull. They exactly will sign you up, give you a card, and the only catch to it is that they have an annual fee. But we got to pay to play because, you know what I'm saying, we got ourselves in this hole. So we gotta pay somebody else to help dig us out of this hole, get us out, right? So we gotta sign up for this credit card. And now I'm gonna tell you the credit card. Number one credit card I like to tell people about is called Open Sky. If you go to Google and you type in Open Sky.
You giving them all the goods. You know, that's what the other play. You giving them the goods ahead of time.
I'm trying to give them the information.
Hey, look, everybody, y'all just gotta make sure y'all call it. We're gonna give you some of the goods, but you gotta call us so we can get the next steps in there. But go ahead with Open Sky. Go ahead and keep them school.
So we got Open Sky, and then you can easily go to Google and type in Open Sky CC. And then, you know what I'm saying, it's the first thing that's going to pop up. It's going to be several links that pops up. You actually take that link, and then you actually go to the website and then sign up. It'll literally take you 5 minutes. 5 minutes to sign up, a little bit of banking information and actually be able to debit the money. And then, you know what I'm saying, they send you out a credit card. And that credit card will report to all 3 credit bureaus. And then that's a step in the right direction, right? But there's other cards that you can actually get that do the exact same thing. But you know what I'm saying, like Walt said, you got to call to get those details.
Look, we're going to give you a couple, because the other side that I would add to this is, of course, that's only one trade line. And then we don't want to go, we got to wait till the next episode to really start talking about trade lines. And you need more than one good trade line for a bank to give you $200,000 and $250,000 to buy a house.
Of course.
You know what I mean?
Of course.
And so we'll dig into that a little bit more, but that's a good start to it. So then I got a question for you. Look, I'm gonna dig deep on this. Okay.
Dig it out.
Tell me why we see it within our culture so much. Now, you're an African-American man, I'm an African-American man, and we do see it across other cultures. We do see it in other people, okay? Because credit is one of them things that it'll hit anybody. If you don't pay your bill, it's going to hit you. But I will say that we do see, and that's not taking away the good ones. We do see good credit in our culture too, okay?
Right.
I don't want it to seem like we saying our culture all has bad credit, okay?
Right. That's not the case. I got you.
That trending wise, we see a lot of it come up within our culture. Like I said, I'm gonna keep it real on this on while we talking. So I'm gonna kind of go outside the lines of the normal, what we normally talk about, PC wise, and just keep it real with everybody. Why do we see it in our culture, you say?
But I think it's just years and generations of just bad information. And it's not to say that our people or our parents or whatever the case may be are not in our best interest, but you only know what you know. Like, let's just say, you're in, for an example, you're born and raised inside South Park. Your parents may not have been outside of South Park, so to speak. They may not have been able to experience different things. They may not have been out of the country, even though they have a perception about going out of the country. They have a perception about going to a different state or whatever the case may be. So the perception that they have, they tell it to you as if it's 100% true. But you can't necessarily take that for full value, because if they've never experienced it or never got the education to find out about this different stuff, it's not that they're trying to lead us astray on purpose, intentionally, but it's just that their experiences and their knowledge is a little bit limited from what it is now. Like, imagine how much technology has grown from back in the 50s or the 60s or whatever the case may be. Can you imagine somebody still talking about they want a flip phone, the kind of, one of those phones where you strap it on top of your shoulder, you know what I'm saying?
The brick phone.
Right, the brick phone, right? So you know what I'm saying? Can you imagine people still talking about that to this day, even though things have evolved? So long story short, you know what I'm saying? I think it's a lot of just generational curse is what it is. It's just years and years of information being passed down. And then eventually it takes somebody to kind of be a black sheep, if you will, you know what I'm saying? Not necessarily have to be a black sheep, but you just have to be somebody that seeks information. Like, okay, my parents told me this, but is that true? Let me Google this thing real quick. And see if that's actually true for what everybody else thinks.
Look, type in, hey, let me call Walter real quick. Well, Walter Davis. So let me go ahead and call Corey Smith real quick. Hey, look, that was a seamless plug right there, but you know what I'm saying. But to keep it real is, I think the other side of it too, and I agree with you. I think that's a lot of it, and I think some of it too is trust. Like, for some odd reason, I come across people I seem to have to push a little bit harder to get trust and get them to understand that, hey, look, I'm here to help you. Like my ultimate goal is to educate you and get you to the point where you can buy your own house. I mean, you already pay the monthly payment. Why not own it? You know what I mean? And try. But you know, they come and they kind of look at me sometimes because I'm African American, and in a way, you know what I mean? They're like, okay, well, I don't know. Is he gonna tell me everything? You know what I mean?
Right.
I mean, and I think some of that comes from that same thought of what you just said. There is those that are venturing out. You know what I mean?
Right.
They say, well, who do I trust? Who's the person that's gonna tell me to, you know, good, bad, or ugly, right? Who's the person that's gonna tell me what's right in this scenario? You know,
and then who's the person that actually knows what's right, and they're not just telling me bad information because they just don't know, or BSing or whatever the case may be. And I do think that's a lot of that out there. And I think from me and your perspective, you know what I'm saying, I think what we do a good job of is I think we do a good job of educating people. So it's not necessarily like, hey, look, you asked this question, it's not like a one-word answer, like no. But you know what I'm saying, except for no, and here's why. And I think when people are educated to understand a little bit about what you're talking about and why you said what you said, then it makes them trust you more. Like, oh, okay. Because I think even if people don't know about different things, they can kind of tell if you BSing or not. You know what I'm saying? Like if you know what I'm saying? Like they can tell. So they know from a lot of different things that, okay, well, look, Walt know what he's talking about. I can trust that.
I can trust that. So, you know what's funny about you saying that is I just always came with the type of thought process that if I don't know, I'm gonna tell you I don't know, but I can find out. You know what I mean? Like I might not know the answer right now, this minute, but give me a minute. I'm gonna call the right people and get the right answer for you so that you get the right answer. Because at the end of the day, my goal is to make sure you are making the best decision for you. You know what I mean?
Absolutely.
Your money, you spending your money. I want to make sure, and I know you think this way too, we want to make sure that you feel good when everything's said and done. You're like, okay, this was a great decision for me and my family, you know?
100%. And I think, you know what I'm saying, when it comes to people, and I've listening to some guru or something like that, you know what I'm saying, that talk about this motivational type stuff. And they just talk about when you're building trust, it takes a while to kind of finally build that up with people, but you can lose trust and lose respect and credibility just like that. So you know what I'm saying? When you actually talking to people and you don't know the answer, even if you do just kind of blurt out an answer, right? You know what I'm saying? And you don't necessarily know if that's true. If you got to come back and say, okay, well, look, I was wrong on that. You know what I'm saying? I'm sorry. This, that, and the third is what's is what it really is or whatever. Instantly, you know what I'm saying? They ain't going to tell you that, but instantly in their head, they like, man, this cat don't know what he's talking about. He don't know what he's doing.
Oh, yeah.
He don't know what he's doing, man. You know what I'm saying? He said this, that, and the third, and either it didn't happen or now he's backtracking. You know what I mean? And so it's better, you know what I'm saying? It's better in people's minds just to say that you don't know. Like, hey, look, that's a great question. I don't know, but let me find out. Let me find out what it is, and let me get back to you on that, or whatever the case may be. And then, you know what I'm saying, that'll prevent you from losing credibility like that and losing clients, because that does happen.
So you're telling me basically some of it's education, right? Would you say some of it's mindset too? You know, would you say, no, that's not as much of a scenario, it's more of an influence mindset? Or would you say it's something else completely in regards to just the mentality of credit and how important it is?
So for that, I would say it's pretty much all of those things. Right? So, you know what I'm saying? I think it's more like a bulk load of it, over 50% of it is influential mindset. Yeah. Because I think, you know what I'm saying, a lot of times we take what people say as the gold standard. Like that's true. And people misinform or people misunderstand or whatever the case may be a lot of times. But I think, again, it boils down to, not influential mindset, but just regular mindset, because are you just a person that's just going to take everybody's word as face value? Like that's the holy grail. You know what I'm saying? Like they said this, that's what it is.
Yep.
Are you that person that's like, hey, look, they said this, let me do a little bit of digging and see if that's actually the truth. It just boils back to your mindset. So to get back to your question, I think it's a combination of all those things that you mentioned.
Gotcha. So as we circle back around to that beginning part of what we was talking about, right? In the beginning part, we was talking about credit, and having bad credit, and like what was the first steps. And I think we hit a lot of points on the first steps. So let's say they got a credit card.
Yep.
What's the next step?
The next step, depending on your credit, go talk to a credit repair person. Honestly, that's a bad credit. And now, regardless of how much good that you do, it's going to take forever for you to actually build up your credit unless you're removing some of those old items off. Now, I never tell people to actually pay off collections. Well, I wouldn't say never, but majority of the time, you know what I'm saying, you don't want to pay off collections. But sometimes you go to a credit repair person, they've just been working 6, 8 months, a year, or whatever the case may be, and they just cannot get this thing off. Sometimes it's just better to do what's called a pay for delete. Like, hey, look, man, this thing is killing me. And I give you an example. I had a client one time that was real close on her debt to income ratio. And she actually had this house that she just wanted to buy. She just had to have. It was like 343 or something like that, right? And the problem is that when you're doing an FHA loan, you have to combine all your collections together. Not charge-offs, not repossessions, just collections. You have to combine all those together. And I have to take 5% of that and count it against your debt to income ratio. Well, in this situation here, it made more sense for her to just kind of, hey, look, you're close enough to be able to make this thing happen, but this $400 payment is actually killing. So you know what I'm saying? I need you to actually go and settle that, and then you can go get your house of your dreams. So in a situation like that, you may just have to actually go and take care of a collection just to be able to get into a home. But in most cases, you don't want to pay off collections. You want to get a credit repair person to just get that off, dispute it and get it off your credit report. And then that way, you know what I'm saying, you don't have to worry about paying so much in order to kind of get it off. Now, depending on your credit score, you might have, $40,000 on there that you need to get off. And even settled, you don't want to be paying that, because you can come to me and say, hey, look, I paid off all my collections. I'm good. Okay, but now you only got $500 in your account. How are we going to go buy a house? How are we going to do that?
Yeah.
So that's the biggest, that's the next thing that I would say, is actually be able to go to a credit repair person and talk to a credit repair person about helping you out with your credit.
I think that's so vital for people to hear, because I think people have the misconception of, well, okay, I'm going to pay off all my bad credit that I have that's on my credit report. I'm going to just pay it off and that'll fix it. And like I know that sometimes that's not necessarily the case, especially if it's an old item. Some of those items become active again, or it looks like it's active, which now holds against your today number. You know what I mean?
Right.
And that's going deep. That's some of the stuff that when you consult with us, we talk about that. We talk about where you can get the best bang for buck, in regards to credit. But I think the thing that people need to hear is, they need to hear these steps, and if you notice, we still ain't got to the point where we talk about application. We ain't talked about going to look for a house. We're picking out houses. We ain't even got there yet. You know what I mean?
Oh, yeah.
And because I know when I get my first call from people, the first call I get is, Walter, I'm ready to buy a house. Out of here's 4 houses. They done sent me 4 houses that they done found on, MLS, or HAR or Realtor.com or something. You know what I mean? And I'm like, okay, did you get pre-approved? No, not yet, but this is what I'm gonna pay. And they sending me, $300,000 houses.
Yeah.
And me, as you know, and a lot of people out there don't know, I was a mortgage guy for a while, for about 7 years. I was a mortgage guy. I start to ask them some of them preliminary questions, and I find out, I'm like, I don't even know if you'll qualify for $300,000 based on the preliminary numbers that even I'm coming up with. So I think some of that plays a role, would you say, too, in the misconception of what they think they can afford versus what they actually can afford. But that really 100%. Comes down to really debt to income. That's where that debt to income plays a big role. That's where how much you make, how much you got in debt, all that stuff really plays into effect, right?
Absolutely. So I think the biggest misconception is that, you know what I'm saying, when they're looking online, they're looking at the mortgage calculator, but they're not looking at the fine print of that mortgage calculator. So what they're thinking in their head is, oh man, I can afford this $400,000 property and my note's going to be $1,200 or something, some craziness that they saw online. And that's absolutely not true. So now in their head, they thinking they qualify for 400,000, but in actuality, you're down here at 180 or somewhere around there, right? And but people just roll with that, and then they contact the realtor and say, hey, I see these houses right here, I can afford that payment. I want to go out and take a look at that house. And it's like, no, it's not that simple. So they have to be able to come to me as a lender, and then I'll be able to look at the whole picture to be able to tell them. Like, I know you, well, you know what I'm saying? We can't actually put anybody out there in a car and go out there and drive around looking at the house unless we know what you qualify for.
Yeah.
Period.
Well, it ain't no point in doing it. It really ain't no point. Ain't no point in looking. It's kind of like grocery shopping. This is how I tell my clients all the time. It's like grocery shopping, right? You don't just show up at the grocery store and just start throwing stuff in the basket. Usually, even if you're not a budget person, you got an idea. Like you're not showing up at the meat counter. So give me 7 steaks. You know what I'm saying? You give me the crab today. What's the that's just not what we doing, because you got some sense of how much money you gonna spend at the grocery store, right?
Right.
Now, at the same time, do you got a little bit of extra? I always like to tell people, you might have a little extra to get some cookies, get some ice cream, you know what I'm saying? But you're not going in there and spending $500, $600 in the grocery store without having an idea that you don't even have $500, $600 in the bank, okay?
Yes.
And that's the biggest key with going to shop for a house is ain't no point in going and looking at a house until you know what you can get a pre-approved for. Like, what's in the bank? What's your buying power? You know what I mean? And that's why all these steps are so important and vital in doing it right, right? Right. I say to people all the time, what we do, is we take a complicated process of buying a house. Because really, if you really look at it it's a lot of stuff, a lot of moving parts in buying a house. But we take a complicated process, and if you do it step by step through the right steps, it makes it a lot easier, a lot more efficient in getting it done. And you don't be so stressed out.
Right, there you go. Because now, you know what I'm saying, if you don't take the proper steps, you don't put yourself in a position where now, you know what I'm saying, you start to try to figure out everything after you done already got inside the grocery store. You definitely don't want to do that because you wasted everybody's time, including yours. Yeah. So then that's where you want to kind of get all your ducks in a row up front, know what your budget is, and then go to the grocery store and go get what you need, or go shopping for a house and get what you need.
Gotcha.
Yeah.
Well, I'll tell you, Corey, we can sit here and talk about this when all we're talking about is credit. We can sit here and talk about credit for days, right?
Days, absolutely.
I'm gonna kind of wrap this up a little bit so that they can kind of get to the back end, and they just gonna have to listen to the next one, because we'll talk about some credit again. Maybe we'll talk about debt to income ratio next week. You know what I mean? We'll talk about step 2. You know what I mean? Again, we still ain't at the point of going to look for a house, because you got to go to step 2 next. And if you want to hear that, you got to come in next week and check us out and see what we're talking about. Well, I want to ask you, my final question for you is what would you say is the biggest hurdle that you come across when you actually get somebody that wants to get financed for a property? And that's good credit, bad credit, any of them.
I think the number one thing is actually credit. And I think a very close second, even though you didn't ask for, I think a very close second is debt to income ratio. And I tell you why. Number one, credit is the biggest thing because people just don't actually, some people just don't actually care about their credit until they want to purchase a home. Then they actually start worrying about their credit and what they actually need to do to actually, you know, kind of get their credit scores up. And then
if that's when it becomes a focus, right? That's when it becomes.
That's when it becomes exactly. But you know what I'm saying, and the thing is that credit should always be important.
Yes.
Like, you know what I'm saying, that's what people don't understand. Like, credit should always be important because if your credit is good, you can walk in anywhere and ask for the top rates. You can ask for the top terms. You can ask for whatever it is that you want to, and people going to jump leaps and bounds trying to help you out or trying to get your business. But if your credit is not there, best believe they're going to run you through the ringer and they're going to take advantage of it. You walk into a car dealership with a 500 credit score and they slap that 23% interest on you. What are you going to say? If they say, hey, we can approve you, you've been denied at 6 other dealerships, but we'll approve you, but you got to take this 23% interest rate. First off, I think that's predatory lending. Let's just start right there. But second off, a lot of times if your credit score is not that good, you're going to be like, well, hey, I'm approved. Whatever I need, I'll pay the 23 as long as you give me the car, which is crazy. So I think, you know what I'm saying, from to circle back to your question, just to kind of talk about the actual credit, which we talked about that. The second thing is the actual debt to income ratio. For whatever reason, probably because it's so much easier, a lot of people want to run out there and get the new car before they get themselves inside a home.
Yeah.
That's the problem. You know what I'm saying? So like you just got in a car last month or just got in a car 6 months from now, whatever the case may be. You either got a lease, you either got a purchase, but you have this high $600-700 note on a Jeep Cherokee or something, right? You know what I'm saying? Like that is actually going to hurt you when it comes down to the debt to income ratio. So now, as opposed to, you know what I'm saying, just being credit challenged, now you have a debt to income ratio problem. And it's not so easy once you purchase a car to just get out of that deal. Because if you end up taking it back to the car dealership, they're going to ask you for a bunch of money back. Or they're going to put it on your credit as a repossession. Now your credit takes a hit. It's a kind of a trickle-down effect a little bit. So the one thing that you don't want to do to protect your credit and protect your debt to income ratio, don't go get a car first. Let's get you inside a house, then go get the car, is the correct way to do it.
And then this, what I'm kind of getting from what you're saying there is 2 big things. The first big thing I'm getting is if you're young and you haven't stepped out there yet to go get that new car or whatever it is, when your credit is still good, manage it, maintain it, pay attention to it. Don't overextend yourself as a young adult in the early stages, and buy a house. That's an asset, right? That's going to appreciate. Cars depreciate. They go down, houses go up. Okay. So that's the first thing. The second thing I'm getting from that is if I do have challenged credit or bad credit, as we keep it real on here, okay.
There you go.
Is first off, I need to see where I'm at. And I need to start to come up with a game plan. I need to work with somebody to come up with a game plan, a professional, not somebody, not Uncle Willie, you know what I mean? Not Johnny over here, but work with a professional that knows what they're talking about, that can help me come up with a game plan to start to move my credit in the right direction. And while I'm doing that, I have to pay all my stuff on time because I got to continue.
Biggest key.
It's a moving bar. I got to keep it going as I go through it. And then lastly, I would say the biggest thing I got from what you were saying here is that understanding how much debt to income, which that'll be in the next episode we talk about. We'll talk about that next week. But understanding how much debt, because I got some good questions for you about that we're going to talk about, like student loans. Can I buy a house if I got a student loan? What if I co-signed on 2 other cars? Can I buy, you know what I'm saying? All them questions that we get every day falls into that debt ratio, that debt to income ratio setup, because I only make X amount of money. which then opens up another, box that we'll talk about next week too, is staying at your job history, length of time at the job, and buying a home, because like me and you, we don't get a salary. You know what I mean?
Yeah.
We get paid off the work we do. You know what I'm saying?
Yeah.
So there's other people that want to buy a home that also get paid through what they do. They don't get a salary. They commission based or something like that. How do we work out buying a home and preparing to buy a home for them too? So, those are some good points. Any last words you got for the people out there?
The final thoughts. The final thoughts is you got to execute. Most people know where they are in their credit. Credit Karma is a great tool. There's also Credit Sesame out there. Those are completely free. Make sure you actually download those on your phone. Download it on your phone, iPad. You can sign up through a desktop computer, whatever the case may be. In order to get from point A to point B, first off, you got to know where in the world point A is. So you got to figure out where you are on the map, and then you can figure out where you need to go. So Credit Karma is your number one thing because it's going to give you access to 2 credit bureaus where you can actually get a general idea of what's on your credit. The second thing is make sure to pay everybody on time. It's not going to do you any good to pay for credit repair and you still paying people late. We want those old derogatory trade lines, and we want those old derogatory late pays and all that other stuff to get further and further into the history. That's how we're going to increase our score. There are several different components to the whole credit thing, but find out where you are, and then definitely give either Walt or myself a call. And then you're saying, let's kind of map that plan out for you so we can get you to destination B so we can get you inside a house. Period.
Gotcha. Hey, Corey, as always, I appreciate you. We talk about this stuff all the time.
There you go. I mean? There you go.
And we here to help everybody. And lastly, guys, thank you guys for showing up and visiting with us here on the new episode. This is Keeping It Real on Wednesdays with a mortgage guy and a real estate agent. And we'll see you next week when we talk about all those great topics. We'll see you then. I'll see you, boss.
All right. Talk to you later.
Later.
Where am I at here? Okay.
There you go. There you go.
Now we in here.
We got the boss up on here. Huh? You know, I forgot to plug this up.
Hey, look, I feel like an old man. You know what I'm saying? Like, which button is it?
Right.
Hold on. Y'all like grandpa. You know what I'm saying? Be like, oh, which button is it again?